Hey guys, and now we're celebrating, and Bitcoin has broken its all-time high, Ethereum has crossed the $3,000 mark, and there's a real party going on in the market. But everything always has a flip side, and in the current trading situation, that flip side is late longs. How long have we waited for something like this on Bitcoin? And now we're finally getting it. A rise of more than 20% since the end of June, and a breakout of the $100,000 level exactly the way we wanted to see it, confidently, with confirmation, with a likely retest soon and continuation of the impulsive move. Of course, right now everyone in the market is already discussing the confirmed beginning of the cup and handle pattern playing out. But locally, things are not as cheerful and thrilling as they might seem because Bitcoin as a high-risk asset tends to feel all price inefficiencies. And right now we can see all those inefficiencies on the chart since the beginning of the move. In all previous videos, I said that what Bitcoin did, specifically this manipulation in the 98,000 to 101,000 range, what the price did in that zone. It was a precursor to a truly major move, and I described it that way because before that, the price had reached the lower boundary of the range it had been trading in throughout May, and we saw a false breakout of that range's boundaries, filled the imbalance area as you can see at $98,300, but even that is not the most important part. The most important part is how the price performed the retest of the candle known as an engulfing candle, and the price simply filled that imbalance, thereby confirming its intent. Most likely Bitcoin would aim for the upper boundary of the range that started in May, and so we saw a breakout of that range, a breakout upward, and a new all-time high at $123,000 per Bitcoin. Congratulations to those who opened a position from $100,000. You can now afford to take a risk trade and attempt to short this entire Bitcoin structure with a stop above this high, because you already have decent profit in terms of risk reward from that long, and part of that profit can be risked in a counter trade. At $111,000 and $115,000 we have the first major imbalance, but the most preferred correction for the price is of course a return to the POC level of the May range and a retest of all that volume. The first zone that I would characterize as this would be a compromise for me. I don't believe the price will go any lower and sweep liquidity all the way down to $103,000, and I'm ready to take the risk by entering a position from $110,000, and that would be quite a sound position because in that area are the previous highs, and if the price comes there it will fill untraded imbalances and partially consume the trend liquidity that built up from $105,000 as the price rose to its all-time high. Fear and greed index is at 75. The market has definitely recovered that long-forgotten sense of mild greed, but again this mostly concerns Bitcoin. Open interest has been expectedly staying in the green zone for several days now. The funding rate surprisingly still looks fairly neutral, without a clear bias in either direction. In the past 24 hours, we've continued to see a trend of short liquidations. $571 million worth of shorts were liquidated in the past 24 hours. Longs only lost $210 million. On the daily time frame, the Bitcoin exchange liquidation map shows clearly that the price is now in the most dangerous zone because the risk of traps is extremely high. Bitcoin's price could rise to the $124,000 area, and thus the market maker would simply liquidate the shorts, whose stop losses were placed above the established all-time high. And while it's not so clearly visible on the daily time frame, on the weekly it's very obvious. And on the weekly we can see that all the way down to $103,000 everything is painted orange, blue and yellow. And liquidation volume is measured in billions of dollars, even more clearly visible on the 30-day time frame. Everything down to $105,000 is filled with long side liquidity. Nonetheless, we're seeing continuing inflows into spot Bitcoin ETFs for several days in a row now. The last such inflow was on July 11, $1 billion. Overall, we can say that the trading situation in Bitcoin is very favorable and very interesting, and this cup and handle pattern only adds excitement and a certain intensity to the trading process, as there really are arguments to consider this cup and handle pattern legitimate. Two important lows on the 12-hour Bitcoin chart were swept at $78,000 and $76,000, and after that the Bitcoin price moved to realize the potential of previously collected long side liquidity and already turned in the other direction to collect short side liquidity. It's too early to talk about a return to the 95,000 to 96,000 area, but considering a correction with a potential retest to at least the 110,000 area is completely reasonable and correct. The imbalances that still remain unfilled will be filled. If the price drops to $110,000, it will retest several highs at once, and the only nuance will be this so-called trend liquidity, or more precisely, its remaining portion. Ethereum has filled the imbalance on the daily time frame. After the price moved sideways, we saw a false breakout, imbalance fields on the daily, a return inside the range, and a move straight toward the upper boundary of that range. If you watched all the previous videos, I mentioned at each stage of the false breakout of this range that most likely upon price return we would see a move to the upper boundary, and that's exactly what happened. So the 22% move on Ethereum is genuinely exciting and interesting in the market right now. I hope we keep the same energy, trade more often, and trade together. So subscribe to the channel, support the video with a like. See you in the next video.